So how exactly is a rapidly growing economy like India literally building its future, brick by brick, project by project?
It's a huge question, right?
Yeah, and maybe more importantly for you listening, is the company kind of leading that charge actually a compelling investment? Or is it success making things a bit more complex for, say, value investors?
Mm.
Today, we're doing a deep dive into Larson and Toubro L&T, an Indian multinational conglomerate. Honestly, they're central to the country's infrastructure boom.
Absolutely pivotal.
Huh.
And we've really dug in here, looked at a whole stack of sources, financials, stock performance, company history, the lot.
Right. And our mission for you is really to unpack what makes L&T such a key player, understand its unique financial story, and see what the numbers tell us about it as an investment,
Yeah.
especially looking through the lens of a legendary value investor.
What's really interesting, I think, is that L&T isn't just one thing. It's this massive diversified company. You've got tech, engineering, construction, manufacturing, even financial services.
Wow, quite the spread.
Yeah, it's almost like India's growth story bundled into a single stock, a proxy for the whole infrastructure and economic development push.
And the scale. It's just immense, isn't it? For the fiscal year ending March 2025, their consolidated revenues were, over 255,000 crore?
Mm-hmm. And remember, a crore is 10 million rupees, so that's a huge number.
Huge. And that was like 16% growth year over year. Profits also up 15%, hitting 15,000 crore.
Solid growth. But the order inflow, that's the really eye-popping part.
Tell me about it.
Exceeded 3.5 lakh crore for FY25. That's an 18% jump. It pushed their total order book to nearly 5.8 lakh crore, a record high.
Okay, hold on. A lakh crore, that's 100 billion rupees. So the total order book is somewhere around 70 billion US dollars. Secured future work.
Pretty much, yeah. That kind of record order book gives incredible revenue visibility. It essentially locks in earnings for years ahead.
Wow.
And L&T's strength really comes from being so diversified. Over half, maybe 55% of their revenue is from infrastructure projects, roads, railways.
You mentioned some big ones earlier.
Right, iconic stuff like the Ayodhya Ram Temple, the Statue of Unity. But they're also big in energy, high-tech manufacturing, and IT services through companies like LTIMindtree.
And something you pointed out earlier, their management structure is quite unique for India, right? No traditional promoter holding.
Exactly. Effectively zero. That's a huge differentiator.
How does that play out strategically?
Well, it tends to foster a focus on long-term corporate strategy, professional leadership, rather than, say, family control. It can make them more agile, maybe less insular.
Makes sense.
And they've shown strategic smarts, historically fighting off takeover bids, keeping the company independent. Plus, it's not just India. International orders were 55% of the inflow last quarter of FY25. Big focus on the Middle East.
Okay, so huge scale, massive order book, diverse business, professional management. What about the financial health? Let's look at the balance sheet.
Pretty solid story over the last decade. Consistent revenue and profit growth. The balance sheet looks strong. Low net debt to EBITDA, around 0.5x.
So operating earnings are double their net debt. That sounds healthy.
Yeah, very healthy. And their gross debt to equity has improved a lot too, down from 1.87 in FY15 to about 1.12 in FY25. They're generating strong cash flow from operations, which is vital for a construction-heavy business.
Okay, sounds like a rock-solid foundation. But this brings us to the big question, valuation. If we think about Benjamin Graham, the father of value investing, he'd want that margin of safety. How does L&T look today?
Yeah, that's where it gets interesting. From a strict Graham perspective, L&T looks, fairly valued to maybe slightly overvalued right now.
Okay. What are the numbers telling us?
As of July 2025, its price to earnings ratio is about 31.5x. Price to book is around 4.9x. Compare that to the industry median's PE around 24.6x, PB near 2.9x.
So quite a premium then.
Definitely. Look, L&T has many qualities. Graham liked consistent profits, that huge order book, strong balance sheet. But that premium valuation suggests the market has already baked in a lot of the expected growth.
Leaving less room for error, less margin of safety for a classic value buyer.
Exactly. It's that classic situation. Great company, great story, but the price already reflects it.
So what are some practical issues or potential challenges an investor should keep in mind?
Well, even with that order book, the core construction business eats up a lot of working capital. Their cash conversion cycle is long, around 190 days.
Nearly half a year to get cash from projects. Wow.
Yeah. They've also seen some margin pressure lately, maybe from slow projects or fixed price deals internationally. And of course, there's always intense competition.
And you mentioned some past footnotes, like a World Bank debarment years ago, or recent debates on work hours. Do those really matter long term?
It's context, right? But
Yeah.
what stands out is L&T's resilience. They seem to navigate these things without major long-term financial hits. Speaks to their management and operational strength, I think.
Okay, so let's try and wrap this up. L&T is clearly this formidable growth engine, deeply tied to India's development, great financials, record orders, a true nation builder.
No doubt.
But it's also trading at a clear premium. The market sees the quality.
Right. Which leads to this final thought for you to consider. In a fast-developing economy like India's, does margin of safety mean something different? Especially when the market seems to consistently price in strong future growth. How do you balance that proven track record of a nation builder like L&T with a valuation that, by the old rules looks maybe slightly overvalued, something to chew on?